What if I told you the stock market isn't just a game of numbers, but a battlefield of greed, manipulation, and high-stakes deception? Beneath the polished reports and financial jargon lies a darker reality, where fortunes are stolen, markets are rigged, and the everyday investor often loses. Today, we're pulling back the curtain on the dark side of the stock market. From insider trading to market crashes, this is the story Wall Street doesn't want you to hear. Chapter 1. The Illusion of a Free Market. When you hear the term stock market, you probably think of endless opportunities, wealth creation, and the promise of the American dream. But let's start with a harsh reality. The stock market is not as free as you might believe. On the surface, it's a fair game. Anyone can invest, and anyone can win. But beneath that, powerful institutions control the flow of information, trades, and even outcomes. Think about it. Hedge funds have access to data and trading algorithms that the average person can't even comprehend. High-frequency traders make millions by exploiting milliseconds of advantage, and for the average retail investor, you're playing catch-up in a rigged game. Chapter 2. The Rise of Insider Trading. Insider trading is one of the stock market's most infamous scandals. It's simple. Someone with non-public information uses it to their advantage. And it's not rare, it's rampant. From Martha Stewart's high-profile conviction to Wall Street executives who manipulate earnings reports, insider trading erodes the trust we're supposed to have in the markets. Here's an example. In 2008, just before the financial crisis, several CEOs sold millions of their own company's stock. Coincidence? Hardly. They knew the crash was coming, leaving average investors holding the bag. Chapter 3. Market Manipulation. A Billionaire's Playground. Ever heard of a pump and dump? It's a classic scheme where a stock's value is artificially inflated, only for insiders to sell off their shares at a profit, leaving others with worthless investments. And guess what? Social media and trading apps have made it easier than ever. Case in point, the GameStop frenzy in 2021. While it seemed like retail investors were finally winning, hedge funds and institutional traders still profited massively behind the scenes. They played both sides, proving that the house always wins. Chapter 4. The Dark Truth About Short Selling. Short selling is betting on a stock's failure, and it's a major driver of market volatility. While it can expose overvalued companies, it's often abused. Hedge funds short stocks en masse, spreading negative rumors to drive prices down. This doesn't just hurt companies, it destroys jobs and livelihoods. Take the infamous case of Lehman Brothers during the 2008 crisis. Aggressive short selling played a role in its collapse, triggering one of the worst financial meltdowns in history. Chapter 5. Flash Crashes and Algorithmic Trading. Technology was supposed to make trading better, but it's also made it more dangerous. Algorithmic trading now dominates the markets, where supercomputers execute trades faster than you can blink. But what happens when these algorithms go wrong? Flash crashes. In 2010, the Dow Jones dropped nearly 1,000 points in minutes, wiping out billions. The culprit? A single faulty algorithm. For retail investors, these events are devastating, often wiping out savings in seconds. Chapter 6. The Retail Investor Trap. Apps like Robinhood promise to democratize investing, but are they really helping? They lure in millions with the promise of zero commissions and easy trades. But behind the scenes, your trades are being sold to high-frequency traders who profit off your moves. It's called payment for order flow, and it's a billion-dollar industry. Remember when Robinhood restricted trades during the GameStop surge? It wasn't about protecting you. It was about protecting their institutional partners. Chapter 7. Lessons from Market Crashes. Let's not forget the big crashes, 1929, 2008, and even the COVID-19 crash in 2020. In every case, a mix of greed, poor regulation, and over-leveraged bets by big players led to disaster. And who paid the price? Ordinary people. The 2008 crisis alone wiped out $2.4 trillion in retirement accounts. Meanwhile, the very bankers responsible for the crash walked away with golden parachutes. The stock market is often painted as a gateway to wealth, but it's also a battleground of greed and manipulation. While there are opportunities, they often come at a cost, especially for those who don't know the game is rigged. So, what can we do? Stay informed, question the system, and remember, if something seems too good to be true, it probably is. If this video opened your eyes, give it a like and subscribe for more untold truths about business and finance.